Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. Today we are up 2.5% and we have about 1 hour left in trading. On the 1 hour chart we start to see the MACD turning positive. On the 4 hour chart we start to see the MACD converging up, and on the daily chart we may have a possibility we continue sideways. Reason why: we see some divergence and possibility of converging MACD as well, and for a possibility of the 9-day moving average starting to diverge with the 18-day moving average. So that's a concern for the bulls, and I do see support, which we found last Friday or last week, and that support was at the price of $19.40 or $19.40, and that coincides with past support back in early July and early June as well. So we did hit that support, and for resistance, really the 50-day moving average, since it got rejected here back in May 20th and back in July 11th. It did not breach over the 50-day moving average, and the 50-day moving average is getting lower and lower, so we might have a chance that we might breach at the moment. Who knows? So right now we see that as resistance. If we were to move on higher, that price movement is about 3.5%, and if we were to continue to move down and hit support, that price movement is about 2.3% move down. So on to the next module. On here I'll go over the forecast where natural gas will head to in the next coming days. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these trends that we should focus on? First, I'll compare the current trend right here with this trend down here to see which forecast was the best fit. And this forecast, or this model, dated back to November 2nd, 2012 to June 31st, 2013. So what we have in the current trend, let's start to compare it. We see it touch the upper Bollinger Band right in the beginning of the trend, and then we proceeded to go in a downtrend right down here. We touched the bottom Bollinger Band right here once, and when we move further along the timeline, we touched it a little bit lower, and then we proceeded to make a reversal and touch the upper Bollinger Band right here. And after that, we start to see it revert to the mean and touch the middle Bollinger Band right there. So that's the current trend, and what we have here is a similar pattern, touching the upper Bollinger Band right here, and then we see a downtrend for several days, and in that downtrend we touched the middle Bollinger Band right here, and this, and once more down here the bottom Bollinger Band, and then we proceeded to make a quick reversal to touch the upper Bollinger Band right there, and then we also reverted to the mean. This time it opened slightly below the middle Bollinger Band, but you get the point. What we have is 1, 2, 3, 4, 5, 6 points, and 1, 2, 3, 4, 5, 6 points. So there's reason to believe that the trends and patterns are the same. The forecast would also be the same. So this trend dated back to November 2nd, 2012 to June 31st, 2013. So back then natural gas was down roughly 1.9 or 1.8%. So still to the downside, but most likely sideways action due to the daily MACDs And on the line chart, we have the current trend and overlapping it, the 2012 to 2013 trend, and it lined up pretty nicely. So that is all. If you enjoyed this content, feel free to like, subscribe, comment, and thank you for watching.